Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. LME 3-month copper. So what a difference another week makes. The big picture now has a dark blue late September 24 to late March 25 bearish Andrews pitchfork, with prices resting just above the middle time, currently at 91.32, as well as the 50% Fibonacci line for 2025 at 91.33. The upside is capped by the 38.2% Fibonacci line, the October 20 to May 23 move at 92.56, as well as the mauve flatlining medium moving average, currently 92.86, and a little higher by the gold slowly declining long moving average, currently 93.34. The whole decline last week was halted by, as I said last week, it was, and I quote, the culmination in a 2-day bullish meeting lines pattern, something to note for the next few days at least, end of quote. Well, we've seen the resultant move higher, and one that once again brings us within one of the 3 overhead congestion areas that I've mentioned so many times before. Between 91.83 to 91.86. This is the weakest of the congestion areas, the others being at 93.95 to 96.06 and between 97.50 to 99.95. Meanwhile, below we have the 50% Fibonacci line of the July 22 to May 23 move at 90.29, though this has not proved to be much use in recent times. It nevertheless worked in between November 24 to January 25, when it was the center of a quite large and successful reverse head and shoulders pattern. Underneath that, and similarly looking good in the past but passable in recent days, is the extension to the upper trend line, currently at 88.10, of the June to August 23 ascending triangle. It all now depends on whether the combination of the middle time and the 50% Fibonacci line can hold up the market. If not, then we can easily be visiting the trend line extension once more, and even the 50% Fibonacci line, the October 20 to May 23 move at 86.86. LME 3-month aluminium. As I said at the opening of last week, and I quote, sometimes the technical analysis on the market works really well, and sometimes it seems that it works wonderfully. This is one of those wonderful times, end of quote. As I've stated here previously, there are a number of patterns here, one within another, all happening at the same time, all affecting the market. To start with, we have the bright red, shallowy, bullish shift pitchfork for the mid-December 23 to late July 24 move. We recently saw prices starting to establish themselves over the middle time, currently at 26.35. But as I said 2 weeks ago, and I quote, it was a tenuous hold over it, and prices dropped down through it and have remained below, pushing further down. This pattern still works at the lower time, and that's currently at 23.26, end of quote. I added last week, and I quote, this is one to keep on the daily chart, as the low of the move has been right on the bright red lower time. Additionally, nearby we have the bright green neckline, currently at 23.53 of the October 22 to May 23 head and shoulders top, and the purple neckline, currently 23.61 of the March to May 23 head and shoulders top. Both of these have been pierced, but we have not as yet closed below either, end of quote. What we have seen ever since is that the bright red lower time was punctured but repaired with no closes below it, and worked pretty well at showing the low of the recent move down. The bright green neckline was breached with only one close below it, and the purple neckline was breached with 2 closes below it, but one of those was barely below. Thus combined, they eroded the bearish incentive enough to halt it, basically in between the bright red lower time below and the bright pink lower time above, currently at 24.20 of the now breached and possibly broken longer term November 2015 to April 2020 bullish Andrews pitchfork. A little above this is the significant 50% Fibonacci line, December 23 to May 24 move at 24.54. On this, I did say 3 weeks ago, prior to all the big moves lower, that, and I quote, in truth, I could see any significant move down carrying on till the 50% Fibonacci line of the December 23 to May 24 move at 24.54, end of quote. The reason for this is that we finally broke down through the previously broken, then repaired, then finally broken, very shallow October 24 to April 25, shallow but quite wide bear channel, currently 24.41 to 26.75. This gave a primary target at 23.17 and a secondary hardest reach target X at 22.10. Now the primary target was reached, but as for the secondary target X, well, as I said last week, and I quote, I'm not so sure it will be, though it does complement the July 2024 low at 22.09.5. I'll leave it on for a little while longer, end of quote. LME 3-month lead. I'm continuing to see some interesting moves in this market. The key features here, and some of them have been here for a while, all relate to the very large descending triangle, possibly a descending wedge pattern that's made up from above by an early July 24 to early March 25 purple broken downtrend, currently at 1974, and also, for now, from above by a bright red breached, possibly broken, early August to late December 24 head and shoulders neckline, currently at 1954. Though it could also be from below by a dark blue, also breached, and also possibly broken, neckline extension, currently at 1901 of the July 23 to February 24 head and shoulders continuation pattern. 7 weeks ago, prices broke higher out of this pattern, and 4 weeks ago they broke higher still over the long moving average, currently at 2028. Back then, and again 3 weeks ago, they peaked at or just under the December 24 high at 2103. In the whole process, the market made a small March-based double top pattern, even Adam type, closing below the neck of this pattern at 2015. Such a move gave us a primary target down in the 1966 zone, close to and just above the bright red neckline, as well as a secondary harder to achieve target down at 1926, close to the lows at the start of this year. Now, this is all very well, but, and this is an important but, I'd previously laid out 4 weeks prior some opportunities topside for the break higher, out of the large descending triangle come descending wedge pattern. I've since retired these as the targets on the topside were instead as the targets on the downside were instead achieved, not the ones on the top side, but on the downside. Now, I also saw for the past few months the possibility for the action since the start of December last year setting up to make an ascending scallop pattern. I even suggested 2 weeks ago, and I quote, the market may try down towards the lower levels, but then turn and go up and go for the top side targets. But I tend to favour the either or approach rather than this way, so it will be top side or downside, end of quote. Okay, so we have created over March and very early April both an ascending scallop pattern and a double top pattern. Prices have also broken down through the bright red neckline and a dark blue neckline, plus both the targets below. The move higher over March and early April is now seen as a false break higher. And whilst we have had a big move lower, I also added last week, and I quote, I would like to see some more action down here to confirm that this is also not a false break, end of quote. Well, we haven't seen that necessary confirmation or action, not just yet, as since the low of last week we have seen prices move back up over the dark blue neckline extension, but not as far as yet as the bright red neckline. That all being said, I am not as yet convinced that the recovery is a false break lower, so I'll maintain the potential targets below for the descending triangle pattern, if not the descending wedge pattern. Hence we have a primary target X4 down at 1812 and a secondary harder to reach target X5 down at 1671. It's below the low of my chart at the moment. Finally, and this is very compelling given recent actions. Let me once more make again the point, one I've been making all this year, and I will do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things, and that's all things going forward this year, in this metal, in a shadow of this bearish longer term pattern. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.